Hi, and welcome to this week's Intentional Wealth Update with Morton Brown Family Wealth. I'm Katie Brown, and I have Cody Demmel here with me today.
Hey, Katie, how are you?
Good. How are you?
Good.
We have been talking quite a bit in some of these updates and in conversations with clients about the news of the day and some volatility, things that we've seen inside the banking industry. Our video last time was talking about cash assets and how to think about them and how to utilize them inside of your own personal wealth plans. We want to shift a little bit because the purpose of these videos is really to think about holistic wealth. And so we want to shift a little bit, recognize we're closing in on the tax deadline here. A lot of people are in the flurry of getting their taxes done. They're speaking with their accountants, they're checking in with their advisors, making sure they have all the paperwork, everything that they need in place. As opposed to talking specifically about taxes, we want to highlight that this is actually a really excellent time to go back and revisit your estate plan. And Cody, share with us a little bit why this might be an especially advantageous time to revisit some of those plans.
Yeah, that's a great point. Going into tax season, you have all the different forms from all the different retirement accounts, different accounts you may have. You're getting all that information, making sure you have all that up to date to give to your CPA for tax season. So while you're getting all the paperwork and going through all the different assets you have, diving back into the estate plan and making sure you have everything up to date and as accurate as possible is obviously beneficial.
Yeah, it's something we've actually been talking about a little bit internally, and exactly that. You're in that mode, you're in that fact-finding mode, you're in that detail mode. And for some of us, it takes a lot of energy to get to that spot. For a number of people, it's taxes, numbers, finances can be a little intimidating, but once you get into that mindset, then it's a really great time to keep that momentum going and taking a look, scanning across the whole financial picture and acknowledging there might be some updates or some things to occur. Something else in the tax return as you're going through your questionnaire for your accountants. A lot of times there are questions about what has changed in your world. And with changes, that might prompt updates. So it's a good reflection time.
When we're talking about the estate plan, we just want to go back to some of the basics and highlight some of the differences that some people may look at. So the estate plan is obviously making sure we have all the beneficiaries and everything set up for both your retirement accounts, any joint accounts you have, and then obviously the will, going over your other assets and make sure everything is flowing how you want it into your estate. And then obviously, hopefully making it as easy as possible for the beneficiaries. So then going back to the basics is we just want to talk through the difference between how the will would potentially work and then the beneficiaries you have set up on each account. So say you have a retirement account and the beneficiaries are different from what the will says, the assets are going to go to what the beneficiaries say on the retirement plan. So whether that's a 403B, 401k, IRA, you just want to make sure, especially as you were saying, Katie, if there are any major life changes, that you're updating the beneficiaries both on the retirement accounts and then also make sure it's similar to what the will says.
Right. I think that is an area of confusion for a number of people. I have often heard from different families that we work with, they say, well, my will is set up to go this way. Maybe it's they have some specific named beneficiaries. They want to make sure maybe some extended family members each get a little something from them. And so they want to take care of some family members there. But then the beneficiary on their retirement accounts, and perhaps that's actually their largest asset too. We've seen this where the larger asset may have a specific beneficiary designation and that does not match the will. And so it's really important to recognize that the only things that flow through the will are assets that you own that do not have a beneficiary designation. Anything that has a beneficiary designation, that will be upheld first before anything flows into the will. Now you can name your will as beneficiary, and there are pros and cons to that. Definitely something to talk out with your advisor. But that's a really good point because there can be confusion there. As you said, it's a really good time to look at your beneficiaries. You might also be in the mode right now as you're going through your taxes. You might be changing withholding on your paychecks. You may be increasing your 401k contributions to make sure that you're maxing out for the year. So in general, you're checking in on your benefits. And so it's a really easy thing to take it that next step and make sure that the beneficiaries are as you intend. What are some other reasons why this might be a good time to revisit that estate plan?
One thing that just jumped into my mind is, especially as you're getting in maybe into your first couple of years of retirement and your income's lower, and you want to have a set asset set to a specific charity, or say to your kids down the line. For your kids, one of the best assets could potentially be to inherit a Roth IRA. So while your taxes may be lower the first couple of years of retirement, maybe you want to do some Roth conversions and build that into your estate plan to have that Roth IRA earmarked to go to your kids or a different beneficiary.
Yes, yes. As you're looking at increasing some of the 401k contributions or other things along those lines, revisiting that balance sheet to just check in on where all the different assets are and where the opportunities might be. And you're exactly right. Roth IRAs are a tremendous asset to inherit. And I love that you brought up the philanthropy side of it, because each asset on the balance sheet, if you have a passion or desire to support a specific organization, or maybe you don't even know what that specific organization is yet, but you know that you would like a piece of your estate to go to a charity or a cause, each asset has its own unique opportunity and also its own unique implication for where it flows, whether it flows to an individual, to an entity, to a trust. So discussing those things with your financial advisor and also your estate attorney to make sure that you have a clear understanding of how things are flowing and that it's doing it in an efficient way. Cody, how often should people be revisiting their estate plans?
Yeah, so I think a good general rule is to at least read over it once a year. And then obviously when you have some major changes, whether that could potentially be a major inheritance from maybe your parents or a different change of life scenario, or obviously if you personally have a change of life scenario, then revisiting it in a little more detail just to make sure everything's up to date. And then knowing that we do have some potential political changes down the line, and who knows what that's going to mean for tax law and how that changes. So making sure everything's as accurate and flowing how you want to.
Yes, yes, we are. We definitely know those tax laws can change, and oftentimes there's a lot more chatter about changes than there are actual changes. So just a word of caution from our perspective, we typically recommend that we wait until those tax laws are actually put in place before proactively making significant moves, because it doesn't always land where we expect it to. Currently right now we're looking at the federal exemption of 12.92 million per person in 2023 that is exempt from federal taxes upon your passing. And if you're a Pennsylvania resident, as many of our clients are, Pennsylvania is a little unique. We have inheritance taxes here. To my knowledge, they have not changed in a while, but they do create unique planning opportunities. And what that means is for your beneficiary, when they inherit assets, if it's a child of yours, like a direct linear beneficiary, it's a 4.5% tax. If money is flowing to your siblings, it's a 12% inheritance tax. And as you go out further with family members or others in general, then it's a 15% inheritance tax. So those are definitely high enough numbers that you want to make sure that you're planning accordingly. So just to touch on, once again, some of those basics when it comes to estate planning. So if anything in this conversation triggered a aha moment for you, we definitely encourage you to reach out to your advisors. We welcome questions here at Morton Brown Family Wealth. Any other last minute notes on this estate planning topic, do you think, Cody? That would be helpful.
No, I think that was a good point you just brought up on the federal exemption limit, because that obviously had a big bump up over the past couple of years. So again, whenever potentially Congress changes that, or if it continues to grow with inflation, just making sure you keep an eye on that. And as you said, just don't try to be proactive, because you never know if it's going to actually go through Congress, even when they're talking about it. But just making sure we have a good idea of or at least staying on top of those exemption limits.
I think a good proactive exercise, though, is continuing to check in with your spouse or significant other within the family, and maybe even with your children, just to make sure everybody's kind of on the same page. I love that conversation of enough. How much is enough for you and your significant other to live comfortably throughout retirement? How much is enough for your children to inherit? How much is enough for you to give philanthropically? So I think that can always be an ongoing conversation so that when there are changes in laws, you're ready. You have a good, solid foundational understanding of where you want things to flow and how you want them to flow, and then you can flex as you need to.
Yep.
Well, thank you so much for joining us today. As I mentioned, if you have any questions or any concerns or anything you would like to talk through, please feel free to reach out to us at mortonbrownfw.com. Have a great day.
Bye.